Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Tuesday the 16th of May 2017, and the trap we're going to take a look at today is one that I refer to as a major structure failure trap which occurred in there. Now then, what is a structure failure trap? Well, the best ones, they can happen in isolation, but the better ones are where you have a strong move that then pulls back, and the better ones are the ones that tend to come back into some prior structure. And essentially what they are is they're just retracements that fail basically, but give the impression that they were working, right? It's not the greatest level, I know, but imagine if that was like a perfect level, just for future reference, and you had something that looked like this, and then you get that strong pop up through the level, makes a new high. They're perfect, contextually they're good. Imagine this isn't the case on this scenario, but imagine that was like your Fibonacci, right? So you drew it from the low to the high, and it was a 61% Fibonacci, right? Something like that. It just adds weight to it. Maybe as a trend line bounce at the same time, decent moving average. All these things add weight to structure failures, but importantly, you've just got to look at each one in isolation and make a judgment. But because this breaks the new highs and the ferocity of the drop, this was the central bank in New Zealand the other day. It's going to have caught people because they were going one way, pulls back, shows them something, gives the impression it's going to follow through, and then just a major El Calapo. So this is the first time back into that location. Those traders will inevitably bail from those losing positions. If you imagine that you went long in there and then you were faced with this disaster, you would have had your stop most likely under probably this structure here, something like that, and as price is coming against you, this is where you'll have that conversation with yourself where you'll cancel your stop. And then the psychology of the trader who went long in there, just consider what that would be like when price is down in here, right? It's important to know that it's when price is over here, if you're not considering what preceded that and the behavior of those traders, you're missing out on a huge amount of information. To discount it as a done deal is not wise, because it's just not the reality. Humans hang on to losing trades. Humans don't like taking loss. It's just goes against everything that we naturally feel and believe. So it's just not intelligent to discount any historical price action, certainly when there's been a trap element to it, and certainly when there's been a big trap element to it like this one. This is going to be the first time these traders would have the opportunity to bail out of that position. You're going to have traders who think this is supply anyway, right? Rally based drop in price, so you're going to get your supply demand type trader going short in here as well, and that adds to the fact that you should see some supply in there, fundamentally sound, although there is some dollar weakness around at the moment. Sentiment wise though, short term stuff is great because it brings price to us, allows us to do business at better prices. But when I just mentioned there that the supply demand traders will be coming in, or maybe some type of level, just your standard resistance trader short enough there, well, guess what we're doing? We're building up a picture. We're adding some pluses in the plus column as to why there should be some supply in there. And obviously we've got the traders in here who are trapped, so we know there's a degree of supply in there anyway. But there's other reasons why there'll be some supply in there, and all that is doing is adding weight to the fact that you should see some, supply demand, in this case supply, at that location for varying different reasons. There's traders taking trades for reasons that add weight to your trade, and if you can figure that out and consider their positions as well, not just your own, understand why other traders may be taking positions when you're considering an entry, then ultimately you just improving the chances of having a profitable outcome. In the end, on a micro level, it's random. And none of us know the outcome of a singular trade event, but it's over that longer term horizon that those profitable patterns start to emerge. You just got to keep moving forward, and we do our best on a trade by trade basis. We do our analysis, but at the point of entry you've got to let it go, and don't take it personally. And if you'd like to come and join me in my brand new inner circle, click the link below, and I'd love to see you on the inside. Take care.